Oh man, so a huge announcement for Ethereum. Vitalik coming out and announcing some important updates on ETH 2.0. We're going to lay all of those out. We're also going to look at the Ethereum chart, which continues to show real great strength. I'm going to share with you my key levels in the charts. We're going to take a look at Bitcoin, MATIC, and Near Protocol, as well as Phantom. Don't forget to smash the like button and subscribe. This is going to be a jam-packed episode, so make sure you check out the links in the description to BYBIT and BitGet if you want to trade any crypto. As you can see, I'm sat here on the Ethereum versus Bitcoin chart. So I just want to show you how powerfully Ethereum has led this run up here. You can see from peak to peak, from the bottom to where we've seen ourselves, 44% move here on Ethereum in just over a month versus Bitcoin, showing real good relative strength and really leading us out from this potential bottom that we feel as though we're forming here on crypto. Another positive day for Bitcoin, up a percent, sitting at 23,000. We're going to come on to Bitcoin and look at the key levels in the charts. But what is going on with the ETH 2.0 merger? Well, the first thing we had was Vitalik came out and claimed that Ethereum will be able to potentially process 100,000 transactions per second, and also shared the future roadmap with a 5-step process for ETH 2.0, which we're going to go through right now. The market has responded really well to this. You can see Ethereum continued to show strength yesterday, which I tweeted about. You can see a nice breakout here on Ethereum, and I'm going to explain to you on the technicals exactly why the ETH breakout is more along progressed than the Bitcoin, and why this is so important, because Bitcoin is a step behind right now, and there are certain tokens which are moving ahead of the pack. So the 100,000 transactions per second, this is huge, right? If it's claimed, this is huge. This eclipses pretty much most of the layer 1 blockchains out there, particularly of the size of Ethereum, right? To be of the adoption and size of Ethereum, but to be able to process 100,000 transactions per second will be huge. But you've got to remember, you've got to take this with a pinch of salt, because 100,000 transactions per second will be your theoretical limit. It's if every ZK roll up, every block is filled, then you're going to get to that 100,000 transactions per second. So we've heard layer 1 blockchains kind of come out with this before with their theoretical limit, but we need to wait till ETH 2.0 really starts to get used, when the rollouts have been done, when the sharding has been done, to see what is the real actual transaction per second that are being used each day. So we need to keep that in mind. Also, with ETH 2.0, we've got this slated date now of around September the 19th for the first step. And the first step is this. It's called the merge. Now, the merge is where you will take your mainnet, the existing mainnet that we have, and you merge that along with the beacon chain. Okay, so you're going to have your mainnet and you're going to merge that with the beacon chain. What benefits will you get from that? Well, the initial benefits you will see from that, you will not see any improvements in your scalability. All you're going to see is improvements in the fact that ETH will finally become deflationary, and the power usage will reduce by 99% apparently. So that is because you're moving from proof of work to proof of stake. That is what's happening on September the 19th. So don't think suddenly September the 19th you've now got this amazing layer 1 blockchain that's doing these 100,000 transactions per second. No, this is a long process. I'm going to explain that right now. Then the second phase, which Vitalik pointed out, was called the Surge. This is step 2, the Surge. And this is touted for around 2023. Now, I need to mention here, this is not me being salty with Ethereum. Ethereum is the second biggest portion of my portfolio after Bitcoin. But we have been told since 2017, Vitalik has been saying we need to move across, right? We need to have the sharding, we need to have all these things in place, and it's taken 5 years, and even then we still haven't got the first phase, we still haven't had the merge done just yet, and I'm expecting further delays. I'm just being completely frank with you. Yeah, it's great they're saying 19th of September, but I'll expect another nudge down the line and another nudge, and I think about 90% of the market has priced in that it will happen at some point this year, but still 10% still think it might go into next year. So there's still this uncertainty around when it's actually going to happen until it actually gets done, just because of the history of Ethereum and delaying their upgrades. Now, this surge process, this is step 2. This is where you'll get your sharding. You'll get massive scalability increases on the rollups through sharding, okay? This is really going to help them tackle that aspect of the blockchain trilemma, the scalability issue which they've been facing. So this is where you're going to see a lot of the difference really come in, and we don't know when this is going to happen, right? It's touted for 2023, but when? Will it get delayed into 2024, 2025? We don't know, but this is going to be the big piece for Ethereum and the whole crypto space. Step 3 is what they're calling the Verge, okay? So this is stateless through vertical trees, and what this is supposed to do is to bring the proof sizes down. Okay, so one thing is to increase your transactions per second. One thing is to increase the scalability for allowing sharding. But the other thing is to now say, let's reduce the sizes of those proofs to make it more efficient and less computationally complex to solve, okay, for the algorithms. Okay, this is going to help them reduce the node sizes and also optimize the storage, which is really, really important, right? You don't want these huge files going around. That makes things far less economical and efficient. Step 4 is what's aptly named the Purge. So this is about really going back and reducing how much hard drive space is being used by the validators, right? Because the validators have to store all this data. So what they're going to do is they'll go back and they'll eliminate historical data and all the bad debt to reduce the file sizes that the validators have to hold. That's why they're going to go back and purge all of this data out, which should improve that. And then their final step is what they're naming the Splurge, right? Just doing a bunch of miscellaneous but important extras, as they like to say. These are going to be a whole bunch of smaller upgrades which just make sure the network runs smoothly. So this is more just your normal maintenance moving on thereafter, okay? And then long-term extras, as you can see there in the top corner, ZK snarks, post-quantum everything, EIP 1559 improvements. So clearly the roadmap is well thought out. It always has been. That's how, you know, the Ethereum team are good at that. Vitalik and the team are good at doing that. But market just wants to see action. We want to see this happen. I mean, like I said, the real changes don't start to come in until the Surge phase, plus the Verge phase. And then once you purge, then things can really start to become more efficient, economical, and you should see the scalability really pick up in ETH 2.0. But the reality is where is the space going to be, right? Where is the space going to be by then? Because when Ethereum announced they wanted to do sharding back in 2017, you didn't have the likes of Phantom, Algorand, Near Protocol. Now you've got really technologically advanced layer 1 blockchains competing with Ethereum. And each year or 6 months even that they delay the progress of particularly the sharding phase, the surge phase, that allows these competitors to get bigger, to get more adoption, to get more traction, and erode away at the Ethereum base. You saw how Solana rose to prominence. If Ethereum had their transactions and their speed up to scratch, if ETH 2.0, all of what we just explained here was done, I don't think there would have been space for the likes of Solana to butt in, right? The Cardano wouldn't have anything to go out. Phantom wouldn't have anything to go out. So all these projects are building off of the slowness of Ethereum, and the longer they take, the more opportunity they have. Now, the other interesting thing that Vitalik spoke about was layer 2 solutions. He was talking about layer 2 solutions and said there's going to be plenty of room for them to do pieces which ETH 2.0 won't address. So he's not just missing layer 2 solutions. He, like I, believes that there's always going to be space for these layer 2 solutions to be a bit more innovative and take more risks, where the base layer, the layer 1 Ethereum, won't be able to move that quickly, right? It's a big machine, and the layer 2 is a bit more agile to do those small innovative tweaks as and when things need to be done. So as you can see on the Ethereum chart here, on the daily, nice big move here, right? A nice break out of the bull flag, a little bit of a calling off, and a nice big move. Now, why is that second move so important? I'm going to switch over to the hourly, because what we can see here is Ethereum has maintained its upward trend. It's got higher lows and it's posted higher highs. That high we just got there 2 4-hourly candle ago, just that one there, has posted a higher high, which is really good, holding a nice upwards trend here. Met our first price target here at 1,524, and then has now worked its way up towards 1642. Now your next level of resistance is coming up on Ethereum, right? It's this bunch of resistance at around the 1,735 mark. So we need to see how that acts for Ethereum. Now you can see if I bring out the EMA ribbon, the EMA ribbon is tracking along nicely with it. Don't be surprised if you get a little bit of a retracement. As long as it posts higher lows and higher highs, it can keep its uptrend, and it's showing really good strength here on Ethereum. Now the opposite is what we're seeing here at Bitcoin. We need to see this push past this level. See where that green arrow is here? We've got to post that higher high, and that previous high sat at 24,287. So we need to get to 24,300 in order to keep this uptrend. You can see where I've got this blue line drawn. We need to keep that upward trend here on Bitcoin. Otherwise, there's risk of us curling over and starting to fall back into our pattern, which is not what we want to do, right? We don't want to go back into this bear flag. If I zoom out to the daily, you'll see how that is progressing. That is not what we want to do, okay? Because we rather just keep this uptrend and keep this momentum going here to the upside. Similarly, let's take a look at Phantom. Let's switch across to the hourly. And as you can see, Phantom is getting that curling over, right? Phantom is not able to post that higher high. You saw that we shared there was bearish divergence a couple of days ago when I shared that with you. I said I was taking profits on my trade here, and you can see we've corrected down. We tried to fight back, but this is weak, right? We weren't able to go create a new higher high, and therefore we're getting that curling over. It looks like it wants to come back again to retest 30 cents. It already bounced once successfully. The second time, it's less likely to bounce successfully. Will it need to come even lower, back down to 28 maybe, to build some support? We're gonna have to keep an eye on that here on Phantom. Near Protocol has shown a little bit more relative strength, right? If you look at the hourly candles here on Near Protocol, you created your high, you came back down for support, and it managed to post a higher high here, which is really, really important. So that higher high is showing that it's able to keep its uptrend, which is showing better relative strength here on Near Protocol. Let's also take a look at MATIC. MATIC, similar to Phantom, I shared the bearish divergence, and you saw it came back down, it ran back up, but again, was unable to provide that higher high. So you can see Ethereum currently and Near Protocol are showing you those higher highs, but Bitcoin, MATIC, and Phantom are struggling to show those. Let's go and then finally come on to the Bitcoin chart, just to show you what we're looking at here on the weekly. And what I want to show you is if I bring out the weekly EMA ribbon, weekly 200-week moving average, we just want to close above this line. We're now getting closer and closer to this. We got 2 hours left until the Sunday, 2 days left until the Sunday close. We just got to stay above this teal-colored line here on the weekly close. On the daily close, remember, we're still waiting for that 24,000 daily close above our EMA ribbon. Just bring that out. We want to see that daily close above our EMA ribbon here in order to flip our EMA ribbon bullish. Otherwise, we have to continue to show the respect to the bears because it's still their trend until we close above this EMA ribbon. Okay, so there you have it, guys. There's a quick update on Ethereum 2.0, what to expect. I'm going to continue to dollar cost average in on Ethereum. I'm dollar cost averaging in on Bitcoin and Ethereum. I'm not going to chase the green candles. I'm not going to get super euphoric and excited about it because of these announcements. None of this is particularly new for me, right? We're expecting this. It will be huge when it gets done, but we're still a couple of steps away from really getting this done. And until it is done and we can see it having an impact, then I'm not going to believe it until we see it. For now, hope you guys enjoyed this video. Don't forget to check out my tokenomics video, which I'm going to link up here. Thanks for watching, and I'll see you in the next one.